It's Brian Preston, the money guy.
This next question is from Chase. This is one, we should have answered this earlier because I've seen this one over and over and over again. Chase said, can I consider my HSA, health savings account contributions, as part of my 20 to 25% annual investment goal? I've never heard this explicitly stated in any of your videos. So if that's a pot of money I'm saving, can I use it? And, I think, Brian, I would imagine the answer probably is, it depends on how you use your HSA as to whether you could or could not include
Well, if we were playing a game of horseshoes, I could say 96% of you, the answer is going to be no. And the reason I can throw that 96% number out there is because I know 96% of Americans that have health savings accounts use these as annual clearing accounts, meaning that you put the money in, you immediately pull the money out to reimburse you for qualified medical and healthcare expenses. If you are using it as that clearing account, you're not really saving the money. You're reimbursing yourself for medical expenses in a very tax-advantaged way. I mean, because you got a tax deduction, and then you got to pay it off, so that money was never taxed to income taxes, and if it's structured appropriately, it might even avoided some Medicare and Social Security tax. Mm-hmm. But that's where your benefit was. If you're thinking more of long-term, because realize when I say I want you saving 20 to 25% of your gross income for the future, that means that that's money that you're counting on that will replace your wages, what you make with your brains, your back, your hands. That money needs to be working. There's a reason we call it the army of dollars, is that you want it out there working hard and harder than you are so that you can actually take a little bit of a break. That's for the 4% that are letting that money work. And I think if you are part of that 4% that actually invest your health savings account, come up with a reimbursement plan for the future, because that's what I don't actually, go and get reimbursements out of my health savings account. I'm letting that money grow with the thought that in the future, I'm going to pay myself back, hopefully with a lot of the earnings, the tax-free earnings, while I still have some principal and they're growing. It's a way to let the government kind of pay my medical expenses and potentially even beyond medical expenses in a tax-favored way. But that's the way I would keep it simple, is that if you are letting it go, continue to grow like the 4% the financial mutants are with their health savings account, sure, count it in your savings percentage. If you're using it as a clearing account, nope, you're basically you're just reimbursing yourself. Now, maybe you're reimbursing yourself and then going and funding your Roth IRA.
Then that counts.
That counts once you fund the Roth IRA.
Yep, love it, love it, love it.